Hello, my name is John Sebree and I'm the Vice President of Public Policy for the Florida Association of Realtors. I'm anxious to update you on the tax reform legislation passed by the legislature in the most recent special session. This legislation will now be voted on by Floridians on a January 29th ballot. Before we talk about tax reform, though, we must be reminded about how we got to the crisis situation we're in today. Save Our Homes was added to the Florida Constitution back in 1992 by the voters of Florida. Save Our Homes treats one class of property owner very differently than other classes, and therefore we find ourselves with an inequitable tax system. If you add to that the fact that property tax levies by cities and counties have increased 99% since the year 2000, you see why we have a crisis in Florida. During that same period when taxes were increasing 99%, personal income growth in Florida was increasing on average 4.2% per year. I'd like to quickly review what passed the legislature during the June special session on tax reform. In June, the legislature passed a bill which provided for a millage rollback and a revenue cap. These reforms the legislature could do statutorily, meaning they did not require a vote of the people to become law. The rollback was between 0 and 9%, which is not huge, but we felt like it was a good start. Rollbacks are good because they affect all properties exactly the same way. The more important piece of that legislation that passed in June, though, was the revenue cap. A revenue cap requires a local government to collect the same amount of tax revenue next year that it did in the previous year, and that's only adjusted for new construction and statewide personal income growth. So remember, that personal income growth in Florida is approximately 4.2% per year. We're very pleased with the revenue cap because it is the first ever guaranteed property tax protection for commercial and non-homestead property owners in Florida's history. The governor signed that bill into law, and it is a done deal. The legislature also passed a super homestead amendment, which you'll remember back in June, but that's been kicked off the ballot, bringing us to the activity of the special session, which just ended. The first component of the recently passed plan is portability. This applies to homestead property owners statewide. Portability allows homestead owners to take up to $500,000 of accumulated savings with them to their next homestead, and it allows 2 years to establish that next homestead. There is a difference in how much you can port if you're buying a more expensive home versus buying a less expensive home. If buying up, and again that means buying a more expensive home, the homesteader simply transfers the difference of just value and assessed value from the old homestead, and they subtract that amount from the new just value. In most cases, the homestead property owner will also receive an additional $50,000 in homestead exemption, but I'll explain the homestead exemption further in a few minutes. If buying down, meaning buying a less expensive home, the homesteader will port an amount equal to the ratio of the old assessed value to the old just value. Rather than allowing the homeowner to port the actual Save Our Homes differential, the formula was designed so that if a homeowner had a 50% assessed value to just value ratio in the old home, they would maintain that same 50% assessed value to just value ratio in the new home. This approach is very good because it avoids the problems that would otherwise occur if taxpayers moved large differentials from very high-priced markets in Florida to lower-priced markets. Actually, what I'll do is just give you an example of each of these. Let's say that Susie currently owns a home and she's lived in that home for quite some time. The just value of her home is $500,000, but because of Save Our Homes, the assessed value is only $200,000. Susie then buys a new house for $700,000. The following year, she'll pay taxes on only $400,000 because she's porting $300,000 in value to her new home. Then, if you factor in the new homestead exemption of $50,000, her total assessed value would be $350,000 on a $700,000 home. Now let's use an example again with Susie buying a less expensive home. She still owns the same home. She's lived in it for quite some time. The just value of her house is $500,000, but because of Save Our Homes, the assessed value again is $200,000. Susie buys a new townhouse or a condo for $300,000. She'll pay taxes on only $120,000 because when buying down in value, she'll keep the same ratio, which in this case was 2/5 of assessed value to just value that she enjoyed in the old home. After factoring in the new homestead exemption of $50,000, her total assessed value would only be $70,000 on a $300,000 townhouse or condo. Also, it's very important to note that if this amendment passes on January 29, 2008, portability will be retroactive to January 1st, 2007. That means that everyone who bought in 2007 and moved from an established homestead will be able to port their savings for the next year. The next portion of the bill passed by the legislature is an increase in the homestead exemption that I've now mentioned in these two examples. This will exempt the $50,000 to $70,000 tier of a homesteader's value from local government taxes. It doesn't include the school portion of taxes, though. The value between $25,000 and $50,000 will still be taxed at all levels. We've always been concerned that a straight doubling of the homestead exemption would remove too many properties from the tax rolls in Florida, and this is especially troubling to rural counties. The Florida realtors have fought hard for this provision to maintain some fairness in taxation and really to protect the small cities and counties in Florida. The average savings, because the school portion is left out of this, is lower than we would have expected. It's about $240 per homesteader, but many would argue that the homestead property owners have been protected the most under Save Our Homes, and that those are the property owners that probably need the relief the least. Another important piece of the plan is the 10% assessment cap on non-homestead and commercial property that's similar to Save Our Homes. This will limit the assessed increases of commercial, rental, and second homes to a maximum amount per year beginning in 2009. This will protect them against high spikes in taxes from year to year. While it certainly is not the lower assessment cap that we supported in the House bill, we believe this 10% cap will offer some relief and protection to those properties in high-valued markets and also waterfronts, for example, which have previously experienced very unpredictable tax increases year to year. Finally, another important section of the plan is the $25,000 tangible personal property tax exemption for businesses. This tax is paid to local governments on items such as shelving, desks, computers, and other office equipment. The legislature estimates that of the 1.2 million businesses that pay this tax currently, 1 million will now be completely exempt from the tax. And very importantly to know is that this proposal drops the filing requirement of the tangible personal property tax. The package that I've just explained to you offers savings that total about $12 billion to the property owners of Florida. The Florida Association of Realtors believes that this is a step towards fixing our broken tax system. In no way do we believe this is the end. We're committed to further tax relief and reforms. We will work towards additional first-time homebuyer relief. We will work towards additional relief for commercial and non-homestead property owners. And we believe that much of that relief can come from the legislature and will not require a change to the Florida Constitution. For example, the millage rollbacks that were passed during the June special session did not need to go before the voters in a constitutional amendment. We look forward to working with Governor Christ and the legislature to advance even more reform efforts in 2008. The economy of Florida needs a shot in the arm, and this amendment needs to pass on January 29th, or we won't see any meaningful relief until the year 2009. Thank you.